Here with Andrew Jackson. He works with marketing advisory in Kentucky, and he's going to tell us a little bit about what he feels about the USDA report and how is the crop going in Kentucky. Andrew, how are you today?
I'm doing great, Luis. How about you?
I'm good. So, what's your opinion about the USDA report, and what are you telling your customers based on that?
Well, the USDA report was obviously a surprise, and I think you're seeing that from the funds now starting to cover corn shorts and such. I did expect corn acres lower, but I was expecting them about a revision of about half of what we got. I expected us to be about 94.5 million. Of course, they came in at 92 from 97 on the previous report. So that was a big surprise for us. Maybe it shouldn't have been. One fertilizer company, CF Industries, did have their estimate as low, in the 92 to 94 million range based on fertilized sales. So at least some people seem to have some clue that number would come in like it did. But overall, big surprise. One thing I think is being kind of overlooked though is the stocks adjustment. The stocks adjustment on corn was about, I think, 273 million above the average trade guess. And so I think what that shows is, yeah, we could have a production issue from lower acres that could tighten the balance sheet a little bit because we essentially removed 900 million bushels from the corn balance sheet. And with the hotter weather coming up, maybe we could remove even more than that. But at the end of the day, it also shows that we have a demand problem. That it wouldn't surprise me a bit if come next week, if we don't see a revision in ethanol grind, if we don't see a revision that would show bigger carry in on the from the 1920 crop.
Okay, and Andrew is from Producers Hedge. He's based in Lexington, Kentucky. And what are you seeing over the crop in your region?
The crop in Kentucky looks really good today. The weather hasn't always been exactly what we wanted when we want it, but overall, it's the net result is right now we've got a big crop on our hands. Now that could all change. Soybeans, of course, that's going to depend largely on late season rains, August, even into September, depending on the maturity of the beans. But overall, it feels like we've got a good one on our hands, barring any late season catastrophe.
Are your customers worried about the prices?
Oh, for sure, yeah. I mean, right now, we spent months, after the COVID meltdown, we spent months with a sick pit in our stomach, wishing we had done more and just hoping we'd get back to profitable prices. Now, we have seen some short covering. We've seen the corn market bounce up. We're starting to see maybe a little bit of a rush in beans. So this has offered some encouragement and offered us some opportunities there to get something done.
Yes, and your company is also based in Illinois. What your work colleagues are saying from there, from Illinois?
Illinois has maybe is not as good as Kentucky as far as its potential, as far as the ability to reach its potential. I think Kentucky will reach its potential this year, or close to it. I think Illinois could leave some yield on the table just based on some chatter I've heard about poor stands, poor corn emergence, population counts, and also there are some areas of some normal high production areas that are starting to get a little bit dry. And they're going to experience some heat according to the forecast next week, with very little rain in the forecast. So there is some potential problems there, but those areas are also pretty well equipped to handle a little heat, to handle a little drought, just because the soil is so good, has such good moisture holding capacity.
And what's your expectation for the market in the coming months?
For the coming months, I look at what we've got right now. This is kind of like a reprieve for us. Okay, this is what we were hoping for. But I don't, and so I look at this as a new lease on life, so to speak. What I don't see it as is a cloak of invincibility, because I still think our market. We're still looking at even a bullish guesstimate that we're going to see, in excess of 2 billion bushel carryout. So I do think producers need to be looking, at least setting targets, and targets probably not too far from the current market if they're not selling current market. So my personal opinion, and this is not a trade recommendation at all, but my personal opinion is if we can get corn up to the 200-day moving average near 375 on the D's, man, I think that's a pretty good place to start, if not before, because in this area specifically, a 360 to 370 D's hedge, historically that will easily turn, I shouldn't say easily, but that historically will turn into a $4 cash sale, which is kind of a benchmark that we use for profitability.
Andrew Jackson on Connected Farmer. Thank you.
Thank you.